Good morning. My name is Hany Assaad, co-founder and Chief Portfolio and Risk Officer of Avance Capital, a fund of funds focusing on emerging markets. And I'm interviewing today David Wilton, Chief Investment Officer of the Funds Group at the IFC, the International Finance Corporation. IFC is the largest investor in private equity funds in emerging markets, and last year was one of the top LP 50s in the world for all markets in private equity. David, I'd like to start asking you what's your view on private equity in emerging markets today, and how do you see those markets evolving in the next few years?
Okay. I think the opportunity in emerging market private equity is still a very interesting one looking forward. But I think the strategy investors are going to need to use to get the value out of it is going to have to change. I mean, looking at the way IFC's invested in the last 10, 14 years, we're currently sitting on an IRR from 2000 to date of around 19%, with lower volatility than the market as a whole. So I think we've got about 2/3 or half of the volatility. So when you analyze what's allowed us to do that, it's been a lot of backing early entrants into newly emerging markets, backing a lot of first-time funds. The returns on the first-time funds have been around 25%. So it's been a very core part of what's driven returns. Going forward, it's going to be quite different. So the number of new markets emerging and becoming available to private equity, so there is an early mover premium to capture, is going to shrink, and those markets that are coming on are going to be smaller markets. So the whole return from backing early movers is going to become a less and less important part of strategy over the next 10 years. At the same time, growth rates at the company level are coming down. So whereas over the last 10 years, particularly up until about 2010 or so, a lot of companies in emerging markets were growing at 20, 30, 40, even 50 or more percent top line revenue growth. These days that's only available in a few pockets, a very small number of countries. Typically these days headline revenue growth is around 8 to 15%. And that has big implications for the types of managers you need to back, because it affects the types of resources they need to invest. So you're going from a market which has been able to make a lot of money on a pure top line growth strategy to a market where that's going to have to be supplemented by a lot more value addition. So rather than relying on pure organic revenue growth to get that same 18-20% target return, you're now going to have to supplement that with inorganic growth, so M&A activity, which requires extra staff, a different skill set. You're also going to have to dive more deeply into the companies to start improving margins, either through driving efficiency or repositioning products into higher margin areas. People can do that, they've got the skill set, but they're going to require more staff to do it. So the cost base going forward in terms of the skills you need, the number of people you need to extract the same value is going up. So that's got two implications. The existing managers are going to have to get deeper operating benches. And talking to the managers that we've backed, it looks like they're already moving that way, they're doing that. But it also has implications for first-time funds. Because there's been a very tough fundraising environment the last 6 years. And funds are coming in first-time funds in particular, are coming in slightly smaller than expected. So people's ability to afford that larger operating bench probably isn't there. So the advantage first-time funds have had, this early mover advantage, is going to start to be compromised if they can't afford the operating bench.
Does that mean that IFC would start focusing more on more established managers, or will it still maintain its focus on emerging managers?
Well, IFC is very keen to promote the industry and see the industry develop. So we will still look very much bottom up, trying to identify new markets that are emerging. Because partly that's our job, and partly there still will be interesting opportunities there. But we are going to have to shift the focus a little into more established mid-cap managers in these markets and have more activity in that area.
Thank you, David. It's a very interesting perspective of overview of the emerging markets private equity.
Oh, thank you.